All right, welcome back, everyone. It's been a while, but we have some pretty exciting Robinhood news to get into. A lot has happened. They just had their crypto event, which changed a lot, not only pertaining to crypto, but also the European market. So I have a new fair intrinsic value for Robinhood, and I thought we should use this video to go through what impact the event actually had on the numbers and my forecast. And although it's been a while, I actually have a big announcement, and that is I will be creating one video per day throughout the whole of July. And I never typically say this, but please subscribe and follow the channel and along. I'm really trying to push now in July to see how far we get. If there's any specific topic you want me to cover, feel free to comment. You know, I'll always interact with all the comments. So let's get straight into the video. So Robinhood has been having a massive run basically since the April lows, which is when I got in, and my shares have more than doubled. And congratulations to anyone else who took that opportunity when we had the big dip back in April and the beginning of May for Robinhood. But when you see a stock run up over 100%, the first thing most investors typically start to think about is, well, is it actually worth that? And my fair intrinsic value at the time for Robinhood, when it was trading around that 35, 30-ish range, was, I think it was $63 per share or something like that. And if we look here on top of this dashboard, we can see that it's actually 92.62 today, which is basically after today's decline, it's pretty much at fair value. So I wouldn't actually mind buying here if there weren't any better opportunities and I had capital to deploy. But let's actually get into what actually happened. So one of the major things is, of course, that they are now offering tokenized securities. We're starting to offer that throughout of Europe. And along with that, Robinhood, the app, kind of soft launched in Europe. Previously, we only had Robinhood crypto, but now we can trade tokenized equities and other securities like ETFs as well. So it is just in the beginning. There's far from all American stocks available. There are only a few popular stocks around for now, but it is happening. And I had forecasted the European rollout to be a bit down the road and not this soon. And the app experience is not quite as good as the native American app just yet. It is a bit slow, a bit glitchy. It was difficult to get a confirmation code and stuff like that. But I mean, they didn't pre-announce anything. Everyone went into this only thinking about crypto, and then boom, the team just dropped that major news. But why are tokenized securities important? And I thought that we should get into everything that is impacted in terms of valuation after the event that happened yesterday. So if we go over to revenues here, and we go to equities yield, and we go to the quarterly, we can see a pretty clear downtrend here. This is the equities yield, meaning how much of traded volume in dollars amount actually translates to revenue. So how much transaction revenue does Robinhood get for each dollar that the user is transacting with on the app? And for equities, it is extremely low, like 0.01% of every dollar you spend actually comes back to Robinhood as revenue. And that is simply because the equities market are just so mature and perfected, and the market makers are essentially undercutting each other, which creates this very, very favorable environment for investors using the Robinhood app. I mean, while it is commission free, there is a spread, but that spread is so minuscule. Like, we're talking very, very small, which is why Robinhood doesn't really make a lot of equities revenue on a transaction basis. most of Robinhood's revenue is from options trading and the crypto. So if we look at the crypto yield instead, we have the opposite relationship. It started at 0.1%. Now we're at 0.52. Basically, you need to spend 52x the amount in equities just to equal what you would get in cryptos from one transaction. I mean, it is a massive difference. So actually, there was an email sent out together with the announcement, which states that there are 2 basis points of yield when you trade with tokens, which is pretty massive because that would return to this normalized period here and also stop the downtrend. So 0.01 is half of 0.02, meaning if you have forecasted the revenue from equities, essentially you could just double that. Like that's how massive it is. Like it might not be too intuitive to you. It might not seem like a big difference, but that's like double. And when you're transacting so many billions and billions amounts of dollars, that translates to revenue and you could essentially double it. But it's not quite that simple because we don't know. Well, it has starting to roll out in Europe. We don't know the adoption. We don't know how long it will take for Europeans to ditch their current brokers. We don't know how quickly this can roll out in the US, how quickly we can tokenize every transaction, or what the actual adoption rate would be of owning actual securities versus tokenized versions of the securities and stuff like that. So it's not quite as simple. Like there are a lot of variables here, so you can't just take your forecast for the next 10 years and double it for equities revenue. It's not quite that simple. But if you're valuing a business, you still need to make assumptions relating to this. You still need to do your best to try to estimate when things will happen. And that will, of course, change over time. Like we haven't had a single quarterly report. We haven't had more details on the actual numbers from this. That will come. Like the biggest mistake people have when it comes to valuations is that they think that you make it once and that's that. Like okay, fair value is 50 and now it's 50 forever. Like no, fair value changes every time you're given a reason to revalue the business. And the event of yesterday is another example. So I actually charted up. I have started to revalue Robinhood, as we mentioned. My previous fair value for Robinhood was around 70 as of yesterday before the event, and now it's 92, which is a pretty big upswing. And we will get into why that is, but I charted up the difference actually. So I took, you might be familiar with average revenue per user. I actually charted up average transaction-based revenues per user. And then I made a comparison chart. So here we have the dashed line here, the blue dashed line is my old forecast for average transaction-based revenues per user. And this black line here, this solid line, is the current forecast I have for average transaction-based revenues per user. And this goes out to 2034. So this is part of my valuation model. Unfortunately, I can't no longer share my models publicly on YouTube and X and stuff like that because I have launched a Substack at research.typeofcapital.com. And one of the perks is that you can get to download all my valuations. And that is available only to subscribers. So that's why I unfortunately won't be sharing the whole model, but if you go back to my previous videos, you can still get a sense of what it looks like and my approach to modeling Robinhood's fair intrinsic value. But as we can see here, it is a massive difference, and the difference only grows over time. So they start off, of course, 2024 is like it has already happened, so there's no difference there. Then we have a slight increase in 25 with basically $1 per user difference. But then it jumps to $5, 11, 20, and then just goes exponentially from there. So by the end, it is quite a big difference, and that will just, if I were to forecast even further out, that gap would have been even bigger. That's how massive the impact is on transaction-based revenues, just simply from tokenizing, trying to estimate the impact of that on the revenues. Also crypto adoption, and since they are rolling out in Europe, there will be more users faster. I already had modeled in and accounted for, like, yeah, Robinhood will come to Europe, but this significantly accelerated my forecast for that. So yeah, there are a lot of variables at play here, and one event like that just changed a lot, because transaction-based revenues are not the only thing you need to keep in mind. For example, if we go and look at assets under custody, this is another one that will change a lot. Of course, gold subscribers will change a lot. Now, this is historical. Of course, customers will change a lot, because, I don't quite expect us, if we go to the annual view here, you can see this massive jump in 2020 to 2021. I don't think a European rollout will be quite as massive, where you essentially double the amount of customers year over year. But it will be a big boost for sure, because in Europe, there is not really any worthy competitor to Robinhood the way that there are in America. In America, you have TD Ameritrade. I guess that's Canadian, but available in America. I mean, you have Schwab, you have SoFi, all these different brokers. In Europe, it's very limited, and they are very primitive. As everyone knows, there's no Silicon Valley in Europe. So the tech scene in Europe is not quite as innovative as the one in the US. So I expect that Robinhood will become very, very popular in Europe very quickly, especially because of all the new features that are just unknown. Like, I can't even buy or sell calls on my broker in Sweden, for example. And as we know, that is one major cash generator. So as they start to enable this for Europeans, it will have a big impact on Robinhood. That's for sure. And not only in Europe, because that creates a network effect in and of itself. So it will also increase the growth and recognition in other parts of the world, including in the US, where they are already operational. So there are different layers to that. But of course, as I mentioned, gold subscribers, net deposits will start to go up as people deposit more. And when there are more assets on the platform, that is when you can start to increase the revenue you get from interest. And also subscriptions, of course, which has been quite volatile historically, but I expect that to actually take off with gold and all the new features in gold that we haven't even talked about, like the banking side of things. I mean, the impact will be very, very big, even though it might not seem that it will be on the first glance. And of course, that will also increase the unit economics of Robinhood, like tokenizing everything. The assumption is that it will make transactions more efficient, meaning that the cost of revenues will decrease for Robinhood, meaning profitability will be higher and stuff like that. So there are a lot of things to unpack. I thought that I should keep this, as I mentioned, I'm going to try to make one video per day. That obviously means that they can't be quite as heavy. So I'm trying to keep them short. This has been going on for 15 minutes, and sorry if I'm sweating. It's really hot in Sweden right now. I don't know if I should do like one long video like I typically do on the channel. So let me know what you prefer, like just a short dive into what has happened, the impact like this. Like this was really concise, not too much detail, just like, okay, this happened, this is the impact. It increased the fair value by $30 for this stock, and here's why, like short, or should I try to make them a bit more long? I don't know. I'm not really a good YouTuber, as you as you guys have come to know. But I'm gonna try to keep probably around 20 minutes, because while I will be very active on YouTube this coming month, doing one video per day, I also will be a lot more active on my Substack, which has also recently launched, and there is already a short one-pager on Robinhood that we looked at on the channel. There are some other articles up. There are thematic portfolios. My personal portfolio, which I actually never shared before. Of course, the valuations. And what will happen now in July is that I will have company coverage. So typically a Wall Street firm will cover a company and give out updated reports on a quarterly basis typically. So I will do something similar where I follow specific companies and have coverage for them. So equity research is just like whatever kind of research I want to share, while company coverage will be a lot more professional and in-depth and follow specific companies. So all of that is coming in July. So please subscribe to the channel, have a look at the Substack at research.typeofcapital.com, and hopefully we can do a lot more content in the future. So thanks so much, everyone, and catch you in the next one tomorrow. Bye-bye, everyone.